Hey guys, this is Mr. Roxy coming at you live from Palm Beach in Florida. It is December the 4th. It is approximately 20 to 8 in the evening, so almost 8 p.m. Eastern Standard Time. And what we're going to do today is take a quick look at one of those macro events or influences that I keep talking about from time to time when I talk about the macro. But to be honest and to be fair, I never really dive deep into them. Sometimes I just mention these things sort of in passing, but I don't really provide any context because, as a general rule, it's not really my field of expertise or knowledge. So I kind of gloss over it. What I want to talk to you guys about today and kind of highlight for you is the sort of imminent collapse of China as a global economy. Now, by making that statement, I'm already taking a position. And the reason why I'm doing that is because during the course of my lifetime, I've seen a few sort of economies come and go, theoretically speaking, because they didn't really go away, but they perhaps did not perform as to be expected. Now, needless to say, no one watching this video is old enough to remember the sort of collapse of Britain as an empire that pretty much dominated and ruled the entire world. But I think all of you are aware of the sort of larger economies of the world today, obviously the US being the sort of proverbial superpower, and then followed closely by China, depending on whether the information that we get is correct or not, then Japan, etc. You know, so we have a whole lot of information that we have access to in terms of ranking. We know who the G7 are, the G8, the G20, the G9, whatever the case might be. We know that if California were a country, it might be the eighth or ninth largest economy in the world. These are all statistics, and at the end of the day, they mean something or not, because it depends where you are and what you do and what you're thinking of. Now, what happened to prompt this video was just yesterday, Unusual Whales on Twitter posted the statement that was released by Evergrande, the Chinese group, saying that they may not be able to make good on their financial obligations, causing our friend on YouTube, Girzor, and I hope I said that correctly, to say this may make for an interesting video, Rudy. And I will admit that I have been following Evergrande. Obviously, we were all in it together when just recently, you know, a couple of months ago, maybe a month ago, the market suddenly crashed. And everybody said, oh, it's because of Evergrande in China. At that point in time, probably the majority of us, including yours truly, was saying, who the heck is Evergrande? So let's look a little bit at the background here. I'm going to give you sort of a bit of daylight in terms of where China is today. And then I'm going to give you the pushback from China in terms of their response to what people are saying, including in this particular instance myself, because I started straight off the bat saying the imminent collapse of China as a global economy, or certainly maybe they don't get to number one, which is obviously their aspirations. Chinese President Xi Jinping, I'm not sure if I'm saying that correctly, understands the economic challenges better than most investors. In recent years, the leader for life, that's the proverbial definition of deep state, has warned of dangers posed by the real estate bubble, excessive debt levels, widespread corruption, rising inequality. Of course, these problems are not unique to the People's Republic. In fact, if you think of where we are today, excluding perhaps leader for life, the other things, real estate bubble, for sure. I know that Canada is in a real estate bubble type of environment. Excessive debt levels, who isn't? Widespread corruption, that's almost every single country on earth. Rising inequality, a lot of people say a lot of stuff about it, but they don't really do anything. Xi's dilemma is that there is no easy way for China to surmount these challenges. The background here is that the Communist Party embraced economic reform in the late 70s. And the Beijing University's Michael Pettis dubbed this the Asian development model on steroids. China's saving and investment rose to higher levels, but consumption fell lower than any other Asian economy ever witnessed. The People's Republic has gorged on debt, which has climbed by around 100 percentage points. Here's an interesting fun fact that I just uncovered by chance. The value of China's real estate market is matched only by Japan's in 1989. The grounds of the Emperor's Palace in Tokyo in 1989 at their bubble's peak, were reportedly worth more than Canada's entire real estate market. Now, China is rumored to have enough vacant properties to house the entire Canadian population of 38 million people. Interesting stuff, huh? You know, I was traveling in Europe. I was in Germany specifically in 1989, and went to a photographic convention there called Photokina, which is in Cologne. And during the time we were at Photokina, there was this currency collapse, and specifically the ruble collapsing. And at that moment in time, I was surrounded by friends and business colleagues from Asian countries, most specifically Taiwan. And the talk around the table, obviously lots of it was in Mandarin, which I don't understand. But my translator kindly said to me that many of the people sitting around the table are saying today they lost money because of the crash, and don't expect to recover any of the money owing to them by the creditors. Now, I'm sure many of you have seen pictures or videos of China's eerie ghost cities. If you have not seen this before, it's fascinating stuff. Nowadays, I don't know what's real and what's not, what's true or what isn't, especially as it relates to China, because I've never been to China. So I don't have any firsthand knowledge on this. I actually have people in my family who are from China, but we don't really talk about ghost towns so much. But this is coming back to the concept of China has enough ghost towns to accommodate the entire Canadian population. If you are not familiar with China's ghost towns, you can Google that, you'll find it quite easily. What about Asian development? So the model has a couple of common features. Cheap loans, that sounds familiar, right? Cheap loans, cheap money. The undervalue of the currency to boost exports. Now, people have been accusing them of devaluing the currency for years. I don't remember exactly when it started. I think from memory that Bill Clinton might have said something in that respect from an American point of view, followed by George W. Bush, and then followed by President Obama, and Trump used to say whatever was current at the time. And of course, we know Joe Biden, sort of as President Obama's sidekick at the time, also talked about the undervaluation of the yuan, the domestic currency. Domestic consumption was suppressed, and this rapid modernization was achieved by adopting or copying foreign technologies. Post-World War II, the combination of these policies proved successful at narrowing the development gaps between Asia and the West. So from that point of view, it's probably a good news story, right? So if you could sort of narrow the development gaps between Asia and the West, it's not really dissimilar to narrowing the gap between the haves and the have-nots. So when you talk about equality, you know, on a greater scale or macro scale, this kind of plays into it as well. China is the largest official creditor to developing countries, right? So China, as the official largest creditor, means that all these countries owe China money. What's interesting here is if you look at the timeline when China started extending credit to other countries, China being the red line over here, it just jumped. You know, this is not a long time ago. So we're talking about a period that's maybe 10, 15 years in the making. But you can actually see, if you follow the different lines, so the debt to the World Bank has been on a steady increase, and the debt to all the Paris Club governments has actually declined a little bit, and the debt to the IMF is actually static. It's flatlining down at the bottom, the yellow line. But look at this on the right side here. China's total loans to Africa during 2000 to 2018, so over an 18-year period, is about $148 billion, mostly for large-scale infrastructure projects. China owns 72% of Kenya's external debt. 72% of Kenya's external debt, $50 billion approximately. That's an estimate. How's this for an example in compounding, if you're not familiar with compounding? Over the next few years, Kenya must pay $60 billion to the China Exim Bank alone. Kenya must pay $60 billion to the China Exim Bank alone. And right now, China owns only 72%, of Kenya's external debt, which is $50 billion. And just over the next few years, they have to pay back $60 billion. Compounding, compounding on steroids. What's the problem? History has shown us that growth in Asia is inherently unstable. So I mentioned to Girzor that this is not my first rodeo. I've actually, in my lifetime, seen and experienced this before, actually firsthand. If you're old enough to remember, which perhaps the majority of you are not, Japan went through a similar cycle in the 80s. And at that moment in time, so during that time, so over a period of a couple of decades or so, Japan was making predominantly manufacturing products, predominantly things like motor cars, like you'd be familiar with, like Datsuns and Toyotas and things like that. They were not great quality at all. And in fact, the crash of Japan and the resurgence of Japan, not only as an incredible manufacturer of really good quality goods, came after the crash. So it's almost as if they first had to crash before they had a come to Jesus moment and say, oh, okay, you know what? We're going to make good stuff. And boy, did they make good on that promise, because they make some of the finest automobiles. And of course, they, for a while anyway, almost 2 decades, dominated the electronics sector completely. So all the top brands, Sanyo, Sony, Panasonic, everything was Japan, made in Japan. I remember reading the book, Who Says Elephants Can't Dance, by Lou Gerstner, who used to be the CEO of IBM. And he said that when they first started doing business with Japan, he asked them if they could build, or he demanded, or maybe negotiated, and said that IBM would require a defect rate of approximately not greater than 4% in any order that they place for products manufactured in Japan. And Japan's response to that was to send him 104% of whatever he required, because effectively they didn't make mistakes. In fact, Panasonic's logo for the longest time during the 90s was the quest for zero defect, and they lived up to it and made good stuff. But they first had to crash before they kind of fixed the underlying problems. Easy money leads to excessive debts. Well, this is not an Asian problem. This is a global problem. Easy money means 0% interest rates. It means cheap money. And too many people with not enough requirements for them to show their credit worthiness have access to these excessive debts, which is cheap capital. Cheap capital encourages wasteful investments and undermines productivity. This is a critical point too. You know, if capital is really cheap, it's easy for entrepreneurs and business owners and corporations to get money, and therefore they're not as strict with what they do with the money, because they know they can get more whenever they want and it's cheap, right? So it undermines productivity, because if you really have to work hard for your cash and make sure that you make good stuff, like my example that I just used of Japan, then you would be very, very much aware of the fact that you don't want to have any wasteful investments, and you certainly want to have high productivity with a quest for zero defect. The suppressed domestic consumption created an unbalanced economy. And of course, there's opportunities for corruption when credit is distributed by state-run banks. Well, actually, to be fair, there is opportunities for corruption pretty much whenever government and large corporations are in cahoots on a variety of different things, but it's especially true when credit is distributed by state-run banks. So now what? To control what it sees as excesses in the market and to limit companies' power and influence, the party has deliberately swept the legs out from under giants like e-commerce titan Alibaba, or ride-hailing upstart Didi. Just recently, they actually said that Didi has to delist from the New York Stock Exchange. That's a completely separate story, but it just shows you how the state in this particular instance is using its muscle in order to say, we need to take control of this and fix the problem. Now there's Evergrande. So I started off with Evergrande. And to be honest, I didn't know much about Evergrande at all until the news hit and the market crashed one day because of Evergrande. It's like, what the heck is that? The massive property developer on the brink of collapse shows that China's real estate boom could be unraveling, with the possibility of sickening the entire economy. Now take note, guys, because if Evergrande collapses, which it looks like it might, this is going to impact the market. So all these things that have been going on in terms of where we're at. So, you know, coronavirus stuff and pandemics and Omicron new variants and cheap money and a general decline, a pullback in technology, pressure from administrations to cut the price of energy for consumers at the pump. All those things are macro events that are actually happening. But take note of Evergrande. If this thing collapses, which it might, this is going to impact you significantly. So just be aware. There are a lot of things that you can do to mitigate risk and to protect your positions. I talked about it in previous videos, so I'm not going to go there again. If that wasn't enough, President Xi must also manage an electricity crunch triggered by his own aims to cut carbon emissions. I mean, like, really, guys? China is burning coal second to none. In fact, it's the largest polluter on the planet today, next to, literally and figuratively, India. And both these growing, burgeoning, fast-growing economies are requiring and have a need for energy, obviously. I mean, and in addition to that, just the access to energy has lifted almost 800 million Chinese people out of poverty. So, man, the energy boom has been good for the world, despite all the bad news that it attracts because of carbon emissions and all that kind of stuff. So this is the actual statement that they released. So this is China's Evergrande group. And you might notice, if you pay careful attention here to the small print, incorporated in the Cayman Islands with limited liability. This paragraph here, since September, I enlarged for you. Since September, the group has been diligently reviewing its capital structure and liquidity with the help of its financial and legal advisors, evaluating all strategic options and maintaining ongoing dialogue with offshore creditors. In light of the current liquidity status of the group, there is no guarantee that the group will have sufficient funds to continue to perform its financial obligations. Oops, they are telling you there is no guarantee, which means they cannot, that the group will have sufficient funds to continue to perform its financial obligations. There's a really good chance. How good, Mr. Roxy? I don't know, man. Like, I'm not a betting guy. 80, 90, 95% that this thing is going to collapse. Look at the gross domestic product for the world's 3 largest economies. Interesting stuff here, right? So the United States is this blue line over here. It's had reasonably good growth, much of it fueled by cheap capital and debt, you know, so not necessarily a good thing, but there's the line, right? Japan has been relatively static, flatlining. And look at China in that sort of 2.5 decade period. The economy from a GDP point of view for China has just exploded. So what happens in this particular instance? Firstly, the Chinese Communist Party needs to push back, right? So this excerpt here is from Global Times, which is a Chinese publication. And they particularly are highlighting Karl Bass. Now, I actually have been paying attention to Karl Bass and listening to his predictions on China, paying attention to it from the point of view of saying, like, you know, if this collapses, this is going to be a macro event that impacts and affects all of us. It doesn't affect me personally from the point of view that I have no investments in China whatsoever. And neither did I follow anything that Karl Bass was promoting or preaching. However, this is the Global Times pushback. Karl Bass's disastrous Hong Kong short, a wake-up call for China bashers. So the Hong Kong short, what is it? Karl and his cahoots, which includes a number of people that you might be familiar with, including President Trump's previous advisor, Bannon, Steve Bannon. Disastrous Hong Kong short sale backed by China bashers. The China bashers, in this case, is Karl Bass and people like Steve Bannon, according to the Chinese publication, is another example of how ill-intended short-selling operations against China are doomed to fail. It's an example of how ill-intended short-selling operations against China are doomed to fail, and a wake-up call for the anti-China forces that seek to profit from stirring panic. So, guys, the media stirs panic in a variety of different ways, whether it's pending doom because of pandemics or weapons of mass destruction or whatever. That's the kind of job that they're in. Bass's Hayman Capital Management made a 200 times leverage bet against the Hong Kong dollar and ended up losing 95% of the $30 million it invested, according to media reports. I have no idea whether that's true or not, but the fact that they printed it and no one sued them yet probably means it's correct, or mostly correct. It being Hayman Capital Management, so Karl Bass's firm, had promised investors a return of 6,400%. Like, who do you think you are, Bernie Madoff? Hey, you know what? The old adage, if it's too good to be true, it probably cannot be true. Investors a return of 6,400% should the Hong Kong dollar fall. There's the proviso, the caveat, should the Hong Kong dollar fall 40% against the US dollar, but that did not happen. China bashing. Bass is among a group of notorious China bassers who have consistently attempted to spread panic about the Chinese market and profit from it. During the period I was just talking about earlier, when I said I was at Photokina, when there was another Asian financial crisis, including a collapse of the Russian ruble, 97, 98, billionaire investor George Soros aimed to sell the Hong Kong market short, with a tax that resulted in volatility in Hong Kong stock and foreign currency markets. Right here at the bottom, bets against the Chinese economy are also frequent in history, though many are disguised as market behavior. Goldman Sachs and UBS both have histories of going short on China. So Goldman Sachs and UBS, and some others, by the way, are actually pretty good at hedging their bets by betting both sides of the equation, because that's what market makers do. So yeah, but they get a special mention here from China saying Goldman Sachs and UBS have histories of doing this type of thing. So guys, that's the video. Let me know in the comments what you think, whether we should be concerned about Evergrande specifically and China in general from a macro thesis point of view. And you can let me know in the comments what you think, and we can get some kind of a discussion going. The fact of the matter is, I've said many, many times before, do not ignore the macro. There's always something that's going to impact what you do. Even if it is as simple in today's terms. This is the 2021 version, right? Where you think that we're kind of just making our way out of the pandemic. It's like, voila, we have a new variant. I was listening to an epidemiologist who's also a virologist the other day on a documentary, and he said, to date, there are approximately 12,000 variants of the original COVID-19 virus that have been identified in a lab. Once again, I don't even know if that is true or not, but the documentary was fun to watch, so I watched it. But it's really interesting stuff, and there's a lot of macro stuff that can impact your investments, and as a result, your wealth, and as a result, your attempt or ability to build some generational wealth. So guys, let me know what you think. That's Rudy for Best Investor signing off, saying have a great Sunday. Bye-bye.